Hey everybody, it's Mark Yegi. Welcome back or welcome to the channel. I'm going to show you how to make cash flow for life, and I'm going to do it on one of my favorite stocks called Tesla, and it's going to be using a strategy of covered calls. Now, if you don't know what covered calls are, it's when you buy a stock and you give somebody the right to take that stock away from you, paying you, of course, and they use that right to make income on it. And now I'm going to show you how all that works in just a second here. The idea is that you never have to work again if you figure out this strategy for creating cash flow. Now, there's no free lunch. There are some caveats. I'm going to walk through all those with you, but I'm going to show you how to do it using weekly or bi-weekly covered calls, or you can even do this with a monthly strategy to create monthly income. I'm going to show you exactly how that works. So first of all, I like Tesla a lot, right? I think they're doing some great things. They're the #1 selling electric vehicle in the world. They are the #1 selling car in the United States, the Model Y. The Cybertruck is already profitable. They're doing a ton of really great things. So I like the stock of Tesla. I've been in it for about 5 years. So I've been through some ups and downs with it. And this stock, by the way, is not for the faint of heart. So you got to be careful. But if you can attack this stock chart really well, and if you can make this work for you, then you can get some really good income. Well, first of all, I'm looking at Tesla, and it's about to break out. So, Tesla is at a breakout point. Now, I don't know if it's going to break out or not. I don't play that game. I try to get the probabilities on my side. I think it's going to break out. It's at the right spot on the chart. We're not quite in the right market. I think right now the market's going yellow, which means I'm going to be a little bit more conservative, and I'm going to use an at-the-money strategy instead of an out-of-the-money strategy, okay? And if you don't know what that means, we're just selling calls to give somebody the right to buy our stock from us right around the same price of where the stock is right now, which is about 266 and some change. So let me walk through this with you. Looking here on the screen, you see a Tesla Leap, right? This one goes out a year. You can see it says 325 days on the screen. So we've got something that goes out about a year, and it's trading for 96.25 by 96.65. Now, when you buy something, you're going to pay the ask price, right? It's like the retail price. When you buy something, you buy it retail. When you sell it wholesale. That's how I remember it. So 96.65 is the price. Now, 96.65 gives you the right to buy 100 shares. That's 9,665 for a contract, gives you the right to buy 100 shares. So we're going to buy 100 shares. Now write that number down or keep that number in your mind, 96.65. Now if you go all the way to the right there, it says $24.50. That's how much the juice is going to cost us. That's the time premium. Okay, so that is going to be coming out of the stock over the next year. That's roughly what, 50 cents a week, something like that. So you're going to be losing 50 cents a week, or roughly that amount, if you do this trade for an entire year. There's a cost to doing this trade. Rather than going out and buying 2,000 shares, which is going to cost you, $500,000, you could do this using the leaps. So I'm going to show you. We're going to go out and buy the 195 strike price leaps, and we're going to pay 96.65 on those. Okay, that's step number one. I'm going to show you how this all works in a second. Step number two is we're going to go out and find somebody that wants to buy them from us, and we're going to sell the right to buy our shares at 265. So we've got these 265s here. You can see that price right there, and you can see when you sell something, you get that wholesale price. So that's $14.15 or $1,415 per contract. Okay. Now, $1,253 or $1,253 of that is juice. That's the amount we're going for. That's our real income. There's some in the money amount, which I don't really count as our income, even though it's coming back into the portfolio, and it gives us some cushion to the downside, but it's not really pure income. It's offset by the base movement in the base position leaps. So we're really going for this $1,253, but when we sell, we're going to get $1,415. But that's not all ours. The $1,253, that's all ours, okay? Let me show you how this math works, okay? This is really fun. So we're going to start right here by saying first step is we're going to buy 20 contracts of the September 25, 200 calls. Actually, it's going to be the September 25, 195 calls, okay, at 96.65 per contract. Remember I told you to write that number down. I put it up here. 96.65 is the amount. And that's going to be about $193,300, okay? $193,300 is out of our pocket. Now, we're going to get some money back with step two. Step two, we're going to sell 20 contracts. They're right at the money, slightly in the money. They're the 265s, and the stock is about 266.70, something like that. But they're a buck something in the money. The stock moves all over the place. And we're going to go out to the November 8th, which is 13 days away, right? I showed you that option chain. We're going to do the 265s, and we're going to get $1,415 per contract. That's $28,000 gross in 2 weeks. Remember, this is a 13-day sales trade, and on the 13th day, at the end of the day, it expires worthless. So, and it expires what's in the money amount. If it's not in the money, it expires worthless. But we keep that whole amount of money that we sold on that juice side. Now, the juice is $12.53 per contract. That's ours. And we can do this every couple of weeks. So we're going to say the net income on 20 contracts is $25,060. That's $12,530 per week, pretty good income per week, or $50,120 monthly. That's meaning you can do this twice in a month, right? This is a 13-day contract, and if you could do it twice, that's essentially a 26-day deal, but twice a month, let's just say, okay? The break even, because you're getting that $1,415 back per contract, your stock can now go down quite a bit. And so your break even is roughly at a stock price of about $252.60. Okay, so you're lowering it. So you're taking the $266.75, which is roughly the price it's trading at right now, minus the $14.50 per share, and you're bringing it to $252.60. Pretty good on a stock that's trading, almost $14 higher than that today. Okay. Now let's talk about return on investment, because that's going to allow us to compare apples and oranges, right, in the same vocabulary. So ROI is going to be at 25.9% per month. That's crazy. Most people don't get that in a year. Now, it's because Tesla just came through numbers. It's because Tesla has increased volatility because it went up like a rocket ship yesterday. And so those numbers won't always repeat, but they're there right now. I just gave you the screenshots. And so if they're there now, if Tesla continues with this bit of volatility, maybe it continues on an uptrend, it's going to still be able to pay somewhat like this, or probably a little bit less. But you're getting the idea, right? If Tesla continues with this volatility, it's a 26% return on investment about in a month, okay? Now, let's keep going. What must happen? Well, in order for this trade to work exactly like I've laid it out, it's got to stay above 265. Well, it's at 266.75 right now. So we've already started off on a good foot, but it's got to stay above that. And Tesla moves all over the place, right? It's up like $40 this week. So we've got to remember that Tesla is not just this little stock that kind of chugs around and goes up and down. It's very volatile, and it's very, dependent on Elon Musk, and he's in the news a lot. So you got to keep those things in mind. But if it stays at or above 265, and that's right at the breakout spot where Tesla's trading, well, then we get all the money that I'm predicting here, at least for the next 2 weeks. The next thing that must happen, if it drops below 252.60, you've got to be prepared to make an adjustment, a defensive move. You've got to not let it just drop, because it could. You've got to be prepared to play a little bit of defense. So you keep that in mind. The third step is if he keeps going up, you can do this similar trade every couple of weeks, because now you're going to be reducing your basis, and you've got a year until these leaps expire. Of course, you can roll them out, sell the whole position. You could do a lot of different things. But if you just think about this as a 1-year trade, and you do this similar trade every couple of weeks, you can get similar-ish results depending on the volatility of Tesla and the juice. Okay, the juice is phenomenal right now. So you can look at this like, if Tesla can just stay the same or it can go up, then you can reduce your cost in the stock, or in the position, I should say, by $50,000 a month. I just showed you monthly income is about $50,000. Well, that's decreasing your basis, your price that you have invested in this. So if it can stay the same or go up, then now you've got it cheaper. So right now we start at 193.3, and then right after we sell our calls, and after a month we get 100, it's down to 143,000. And then the month after that it's down to 93,000. And then it's down to 43,000, and then pretty soon we've got a free position that we still run another 8 months on and keep creating income. Now that's provided that every single time you do it, it stays above the strike price, and there's no guarantee that that will happen. But the way I look at Tesla right now, I think it's going on an upward trajectory. The market's a little yellow, so that's why I'm at the money instead of out of the money. And I could even go in the money and make some good juice on this trade, but I'm showing you an at the money roughly trade. And I think it's a really, really good trade because Tesla happens to be bucking the market right now. It's got some good relative strength, at least this week. Everything could change next week, as you know. So here are some things to think about, and then I'll let you go, okay? First of all, you got to think long term. You know, you could do this as a 2-week trade, for sure. You could go in. There's no reason to go out a year and buy the leaps. If you're going to do that, you could, but you could do those, and then in 2 weeks close out the whole thing and make your $25,000 in income. That's one strategy for sure. But I like to look at it as a long-term strategy, and that's why I'm looking at buying the 1-year leaps, because you have to believe in this stock. Because if you don't believe in this stock, trust me, it's a hard one to be in. I think it's one of the greatest stocks out there, but you got to do your own research and decide what you think. Number 2, you can't concentrate on trying to predict the stock. That's not this game. This game is about income. It's about the juice. It's the hardest thing to get your brain around. How much income am I going to make? This is not a trade where you're trying to hit it out of the park. This is a trade where you're trying to make some predictable income by using the gambler, the person that you sold the option to, on the other side of the trade to make you your money, right? If the stock stays the same, you make the full amount of money, and it's a pretty good amount. Wouldn't you agree? I think you do. All right, number 3 is you should protect your downside by implementing defensive strategies at your break-even point. I alluded to this earlier, but this is a leap. This isn't a stock position. This stock could go down $50 and then you're in real trouble. So you've got to have some good defensive strategies in your trading plan to make sure that you don't get burned on the downside, because that's where your risk is to the downside. 4, you should understand how deltas affect your results. We're going into this with a roughly an 80 delta, and that could go up and that could go down, and that affects your results, right? The stock moves a different amount on that base position leap because you have a delta. Okay, I can't get into all the deltas and what that means on this video, but you've got to understand how deltas affect your results. 5 is that you've got to stick with this strategy. Like if you're making good money, you can see that every 2 weeks or every week even, or every month, you can sell calls on your Tesla and you can bring in income. That's what this is all about, but you got to stick to it. I believe in sticking to it. That's what I teach my students, is like stick to your plan, and then your plan will stick to you, right? And it'll start to make money over the longer term. 6th thing is the volatility in Tesla can come down, and if it comes down, your juice is going to come down slightly. Now, your juice could also go the other way, right? Your juice could go up. Tesla could keep going and breaking out until they're talking about these robo-taxis that drive themselves without a steering wheel and all this really cool stuff. If Tesla does that, people are going to continue to trade this, and it's going to be volatile. Tough ride, but the volatility is what makes us the income. But the volatility could go up and down. Just want to be totally upfront with you and let you know what could happen on both sides. And then you must have a trading plan with what ifs in place. What if the market goes up? What if the market goes down? What are you going to do then? What if the stock goes down? Where is it going to go? How far are you going to allow it to go before you pull the trigger and go to cash or sell a deeper in the money call to protect yourself? There's lots of different strategies. You've got to have them all in your trading plan when you're not emotional, right? Because when you're emotional, I always say when emotions go up, intelligence goes down and vice versa. So you've got to be making decisions when you're not emotional, and that means having a trading plan on paper in front of you that you trade every single time, and you don't stray with it, right? You stay with it. What happens to your mindset? Because that's the worst thing. Emotions really can affect your trade and can screw up your attitude and your mindset. And we don't want to lose sleep over what we're doing in the market. Trust me on that one, okay? So that's how I want to wrap this up. This is a $50,000 a month trade roughly, and that's the kind of trade that I was doing in 2020 and 2021 on Tesla. It was an unreal trade because Tesla was on a big run and it went crazy, and it showed this kind of volatility. Could we be seeing that in Tesla again? Well, I don't know. The company's stock is now starting to catch up with the company's story, and that company's story, I think, is phenomenal. Top selling car, the costs are coming down, the margins are going up. They're still increasing sales every quarter for like the last 10 years. It's been crazy, almost the uncanny amount of execution this company has had. Yes, some things don't come out perfectly, and they take a little bit longer to execute than Elon thinks they're going to do, and maybe even tells us they're going to do, but eventually they've been executing on all kinds of things. I haven't even mentioned the battery technology and the solar technology that this company is coming out with. That's a very quiet part of their increased revenues. But I really believe in the company, but you've got to believe in the company too if you're going to be doing a long-term trade. Anyway, I teach people how to do this all the time. I have a mastermind group where we all get together and we talk about this, and it's a lot of fun. If you think that that's something for you, you should have a decent sized portfolio to be able to be in that mastermind group. But it's an accountability, it's an ecosystem, and we teach people to do that. And it's all based on our course. So if you want to take our course, I have a really great program called the Cash Flow Machine Elite, which shows you how to do the exact strategy that I just did. I like to think that the course pays for itself in the first couple of trades, and therefore it's an investment in yourself. But you get to decide. There's links on the bottom for all the stuff I'm talking about. And thanks for letting me yap for 20 minutes in your ear. I hope you got a lot out of it. My goal is to teach people how to do this because Wall Street's doing it anyway. We might as well learn their game so that we can exceed and beat the rate of inflation and really have success and maybe make some cash flow for life using covered calls. Take care, and I'll see you on the next video.